today what we are working on and talking about is how our mindsets around borrowed money can really impede our money flow. And that's a really big one because I know it's an emotionally charged topic, and I know that borrowing money and how entrepreneurs show up and their attitudes toward borrowed money and how they choose to use it can either make or break their business. So I want to go through this step by step. I've made some notes here that are really important because I didn't want to forget anything. So I have them here and I'm going to be looking down at them. I don't mean to be looking away from you, but I want to have a look at what, I just don't want to miss anything this morning. So the first thing I want to talk about when it comes to borrowed money is, you'll notice I haven't used the word debt because the word itself, debt, is actually problematic. When you look up the dictionary definition of the word debt, it has a whole lot of really ugly connotations with it. Like it talks about it being a trespass, a sin, an amount owing. I mean, it's a word that has a lot of really, really heavy energy around it. And if we're carrying that kind of energy into our business, it's not a good energy to have, and it's a negative energy. And our words will carry that energy. Our words will translate into what's going on for us. And so the word itself, to begin with, is just a word I prefer to take out of my vocabulary. And when I think of debt, I tend to think of that's you're buying things you don't need to satisfy an urgent need right now, like whether it's a dinner out or a pair of shoes or a dress that you maybe don't have the immediate cash for and you use borrowed money. But even that, it's no point getting into self-judgment on what's created because it is the past. It doesn't represent who you are right now. It represents who you were up to maybe last year or up till yesterday. It doesn't represent where you're going. And so I prefer to just think of it as borrowed money. I prefer to think of it as credit lines or what, even think about it, like your credit cards are not called debt cards, they're called credit cards. And it's a much nicer word because credit has a lot to do with a good name, being held in esteem. It has a lot of good energy attached to that word, and it still doesn't negate the fact that it's something that you've borrowed, right? So just the word itself, debt, is crippling. And I don't know any business, like really big successful business, that has done it on their own without borrowed money or angel investors or something that allows them to use other people's money to grow their business. Now, in our own business, it tends to be a little bit more emotional because it's us personally on the hook, and that can be kind of scary, right? And it is risky and it can cause a lot of upset. So even bringing an extra layer of negative energy to borrowing, why do it, right? Why do it? We'll call it borrowed. We'll call it credit. We'll call it something that gives it honor for what it is, that it is something that we are using, that we're not hindering our future by what's our limited circumstances. We have this tool available to us that we can borrow and use to create what we want. There's enough energy and emotion that goes behind that. Let's take away the negative words. So that's the first thing itself. So in my business, I do borrow money. We have a lot of capital investments when we're buying film equipment or a new computer or things that we need to do. Like we have a couple of businesses here in my household, and so sometimes we need to borrow money. Now, that doesn't always mean that we don't have the cash. A lot of times we have the cash, but there's financial reasons that just make a lot of sense, tax-wise, cash flow-wise, and I won't bore you into like some typical accounting terms that we use, but just from a financial perspective, it actually makes more sense to use borrowed money versus saved money. And there's a whole lot of reasons behind that, and I won't get into that. That's not the topic of today. What I do want to emphasize, though, is I do, even with having two successful businesses, avail myself of the tool of borrowed money, and I never call it debt. I'm very well aware of what the balances are. I'm very well aware of what my business owes, and I'm very well aware of my future obligations. But we don't use the word debt, right? We use a whole lot of other things. Line of credit, amount borrowed. Where are we sitting in terms of assets and liabilities? So we just really keep it on a very neutral level when we use that language. And that's something I'd encourage you to do as well, right? It's just, a liability is something that you owe, and there's nothing wrong with acknowledging that. But that's a very clinical word, and it takes the emotional charge out of it. So that's my first invitation to you, is to take the emotional charge out of the word, like anything to do with borrowed money. Like eliminate the word debt from your vocabulary. Okay, so now we're going to move on to point number 2. I see a lot of entrepreneurs, when they do borrow money, it sends them into a tailspin. They get panicky, they worry, they're not sure how they're going to pay this back, and then they feel that if they've borrowed money to do something that they need for their business, they've got to pay it all back tomorrow. And that's such an unhealthy approach, because, and again, you know, I used to work with really big companies, and we would borrow money all the time. You know, there are strategic ways to pay that money back that actually help you make more money. Whereas if you just think, okay, every penny I make next month has got to go pay that right away, you start to create a cycle of never having enough. And when you create that cycle of never having enough, because you've taken everything you've needed, everything you've earned, and you dump it onto what your credit cards are, or your line of credit, or a loan, guess what? You suddenly don't have enough money again to pay for the basics, let alone what else you need for your business. And that creates a mindset of always being behind, of not being able to get ahead. So when you focus on that debt, what you're doing is you're creating either a pattern, or you're creating more debt. Or the other thing too, where they come up, and it's kind of the same thing. You know, one of the things I really like to work with my clients on is creating a money why. Now, if any of this is resonating with you, please just leave me a comment below. I know this is an emotionally charged topic, and that's why I really want to take some time today to just really go into this, to help you get your head clear around this, so that you come to it from an empowered place, not a disempowered place, and not a place of fear. So one of the things I will ask my clients is, let's create a money why. Like, what are you working for? What do you want to create with the money that you are going to create in your business when we work together? And the moment they say, I want to pay off my debt as a money why, we pull that out. You know, normally I let the clients decide what they want to create, but in that aspect, we pull it out, because there's such a difference between working towards something versus moving away from something. One is a fear-based mindset. The other is an inspired and empowered mindset. Now, there's ways to say that. It could be, you know, I want to work towards having $20,000 in my bank account at all times and a constant flow of cash. In that statement, getting rid of the debt is kind of implied, right? And I just used the word debt. Sorry, it's on my mind because I've got it written down here. But the borrowed money is, it's implied that that's going to go away. But instead, what you're doing is you're now focusing on what you actually want instead versus what you want to run away from. Because if you're thinking, okay, I want to pay off my bills, and they will use the word debt, I want to pay off my debt, right? Think about that. Do you want to hop out of bed every morning to pay some bills? Right? Who wants to do that? That's not a why that's going to pull you forward. So that is actually a crippling mindset. Now, I'm not saying we're not going to work on paying down amounts owed, that we're not going to work on reducing liabilities. However, our motivation when creating income and our motivation in bringing money flow into our company, how much more fun could that be? It's just like using the word debt, right? It brings a heavy energy. And if the goal is to pay that back, if that's all you're working towards, that's a heavy energy. And it's a mindset that's going to cripple you, because sometimes the things we have to do in our business, whether that's picking up a phone call and making a sales call, or sending one more email, or putting ourselves out there and putting ourselves to a point where we might be judged, it's getting that blog out, or getting that new product out, or that new program, or going to a new networking event. Those are emotionally hard things for a lot of people. And if what you're working towards is not something that really lights you up, it gets even harder to do those things. And so that's why we really want to make sure that we're using language that using language and setting goals that pull us forward. So if we make that our goal, then it's actually going to create, your two things. Energetically, you're focusing on debt. So guess what you're going to create more of? You're going to create more debt. And you're also not giving yourself something exciting to look towards. So those are two aspects of focusing on paying down what you owe. So take the word debt out, so you don't say I want to pay off my debt, right? Think about it as a liability or something your business owes. And also remember that whatever those balances are, they actually don't represent who you are right now. They represent everything up till that point. So we can talk about how to pay those down in a structured way that really empowers you. And I'll give you just like a couple of like little tidbits that I will work with my clients on. And if you need more help with that, just send us an email to coaching@nafissashireen.com, and I'll be glad to have a conversation with you to see how we can help you get your head around this. But one of the most important things that you can do is think to yourself, okay, how much money do I want to make? I have borrowed all this money. Why did I do it? Like, what kind of return did I want to create? Let's say you wanted to get a 10 to 1. So for every dollar you borrow, you want to make $10. So that would mean for every $10 you earn, you're just gonna put $1 on these balances. So instead of focusing, I want to just pay this off, you're going to focus on, okay, I'm going to make $10, and that dollar is just going to go there. And eventually, if you keep focusing on making $10 and that $1 moves over to what your balances are, it's going to disappear. Okay? Now, we can take that a step further though before we get to that point, and that is to think, okay, but if your current balances in your bank accounts are zero, if you're feeling shaky, if you're feeling that it's, you're still in a delicate, gentle place in your business, then maybe big payments down like that are not quite where you need to be right now. So one of the things you'd want to do then is say, okay, well, what are my monthly obligations? Like, what do I have to pay in order to stay in good standing with everybody, and only maintain that for now? I mean, we're not talking about not paying your bills, because not paying your bills is also a dangerous money mindset if you opt out of them. So this is about thinking, okay, what do I owe? What are the monthly payments? Just pay that and not a penny more until you start to feel in control, until you start to feel in abundance, until you start to feel in control. And then when you get to a level that you're really comfortable with, everything you've put into adding to your savings, you can now redirect to paying down your liabilities. So that's another way to do it. And I know that maybe goes a little bit against what some financial planners might say. And yes, you may pay a little bit more interest that way. However, it's theoretically you'd pay more interest that way, because as long as you're in the mindset that you can't get out of debt, and using those words in that mindset for yourself, and again, I chose the word debt there specifically because of the mindset that goes through, you will continue to perpetuate that. And so in actual fact, it never goes away, and there's way more interest paid, and it's just, you're chained to it your whole life. So if you can get clear on creating that abundance and then creating more, it's going to just open you up. And I promise you, you will suddenly wake up one day and there'll be no balances left, because you're focusing on making money. Okay. The next mindset that can be really damaging when it comes to borrowed money is avoiding borrowing money altogether, is to say, I'm not borrowing money for my business. That's actually really damaging to your money flow, because I don't know, as I said earlier, any successful company that's done it with their own money. And even if you have the cash sometimes, it doesn't make sense to use your savings or to use your operational money, like things that you would be paying your team or your monthly CRM or any travel that you need. It makes no sense to dip into that keeps your business flowing every month to make a big purchase or make a big investment. And avoiding borrowed money means you are letting your mind is saying, I'm never going to get out of this current situation. And that's basically it, right? Because if like we talked about earlier, you're going to focus, okay, I want 10 to 1 on this. I want 10 to 1 on this. And you're going to make, for every $10, you're going to put $1 down on what you borrowed. It's not going to be an issue. It's going to take care of itself. When you say, I'm not going to borrow money for my business, you're kind of saying, like, I don't believe that I'm going to make enough money to pay this back. That's actually what you're saying. That's actually what you're putting into the universe, in the quantum field, into the energetic field, and in your mindset. So you want to think about this logically and go, what do I need? Like, what's the next step? What's the next thing I need in my business? And the thing is, if you had the money, you probably wouldn't need what you need, right? Because usually what you need is something to make your business grow, and it's not going to grow without it. So how would you create that money? Like, if you're not growing and you're not creating the money, you're not going to, you're just not going to have it. So saying I'm never going to borrow for my business is a very dangerous mindset. It will prevent money flow, it will prevent growth, it will keep you small. Now, I'm not talking here about reckless borrowing. I'm not talking about not trying to make the money to cover your current expenses and just thinking, I'm going to float everything on a credit card. And we're going to get into that in a second. That's emotional borrowing. I'm talking about strategically thinking, what do I need? What's my next step? What funding's available? And if it is getting it through borrowed money, it's a good thing. It's a tool. If you use the word borrowed money, if you look at it as leverage, right? For every dollar you borrow, you can create 10, or every dollar you borrow, you can create 100. I mean, if you knew that for a fact, that for every dollar you created, you'd make $100, you'd be looking everywhere you could to borrow a dollar, right? Now, there's no guarantees for sure, in business or life. So a lot of it comes down to what you believe about yourself and what goes on between your ears. And so your actions are telling you what you believe. If you're afraid to borrow money for your business, and again, not for frivolous things, but if you're afraid to borrow for the very thing you need, that is a mindset that is saying, you're actually saying, I don't believe I'm going to make the money. So you want to be really careful about that. And what I have a few episodes of Living Forward TV. I'll link to them afterwards. I can't think of them off the top of my head. Hi, Veronica. Hey, Kristen. Great to have you guys here. Hey, could you guys just let me know if you can see? I'm seeing a big green screen, so it looks like I'm not speaking to myself, but I don't know. If you could just let me know if you hear this. Anyways, I'm going to come back later, and I'm going to post a couple of links to some Living Forward TV episodes that's going to help you know whether it's the right decision to make. Because you first of all have to know if it's the right decision to make for your business, if it is a profitable decision. And I have some worksheets that can help you with that. So I'm going to put them below. Okay, perfect. Thanks, Kristen. I'm going to put links to those below, and they'll just help you work through that so that you can know whether it's the right, because the thing about the borrowing is it's actually an irrelevant decision. It really is. The relevant decision is this the right investment for my business? And on the episodes I'm going to give you, there's a worksheet that helps you calculate it and tells you, based on what you get, yes, you should, no, you shouldn't. So if it's no, you shouldn't, you definitely should not borrow, even if it seems good or feels good in your gut, or it's emotionally appealing to you. You don't do that, because it's going to cost you money, and you wouldn't pay cash and you wouldn't borrow. If it is relevant and if it is profitable enough, and if it will, and the worksheet will tell you, then it's like, okay, well then it doesn't make sense not to borrow the money, because I'm going to be this much more ahead if I do, but if I don't, nothing's going to happen. And we don't want that either, right? So this is the whole thing. It's about when we get into the mindset of avoiding debt, and again, I use the word because that's what people will say to me, I don't want to get into debt. But if we get into the mindset that we have to avoid debt, we're not going to grow a business. If we approach it like a CEO and ask ourselves, what credit and other people's money is available to me that I can leverage and grow, it will make a big difference in your business. Absolutely, for sure. And then along those lines, the next thing I want to talk about is the self-judgment that does come from when you have borrowed money. A lot of my audience, and you yourself too, are most likely a service-based entrepreneur. And a business is a business. There is a startup phase. Now, some people go really fast. Some people take a bit longer. And there's different things that have to do with that. It has to do with, where you are, if you're ready, your mindset, the specific market you're choosing in, where you are in your own development, where your programs are, where your business is. There's a lot of variables there. I mean, and those are the type of things when you're working with a coach or mentor that they can help you speed that up. However, everybody still has to go through all the steps. And so, like any business, there is usually going to be a lot more outflow of cash in the beginning than inflow. And that can create some balances for you. And if you think about a literal store, an actual store that sells things, right? Think of a clothing store. So they have to do the leasehold improvements. They have to get inventory in. There's ways they can have it financed, but we won't get into that. And Kristen, I know you probably know there's ways that can happen that, but it could be merchandise too, right? So they have to go and purchase all of these things. They have to get point of sale equipment. They have to get team in place. All of that has to happen before they can open their doors, because if they open their doors to an empty place, nobody's going to buy anything, right? And so there's a whole lot of outflow that goes out that's got to come from somewhere. It hasn't come from the revenue of the business. It's usually come from borrowed money to get the store set up. And you'll find those entrepreneurs, while they might have some discomfort and like, oh my goodness, I've got some balances here and I'm not comfortable about it. They certainly don't go into self-judgment or blame for that, because they're fully aware that they can't sell from an empty shell of a building. They have to have fixtures, they have to have inventory, they have to have something to sell. So even though there's discomfort, there's no self-judgment, there's no blame, there's no, not wanting to talk to their husband about it, because everybody kind of knows. Somehow when you get into a service-based business, you're still opening a store. You're still going to have that time period where more goes out than what comes in. How fast though in a service-based business things come in is really up to you, and more so than, let's say, a store where there's physical things you have to get a handle on. But you're going to have that. And so when you think, oh my God, I feel so bad, I've borrowed money, you're going to cripple your business. I'm inviting you today to look at yourself as opening a store, that there is a time frame that there will be more going out and you may have to borrow. However, if you borrow strategically and you follow the examples that I'll give you on those handouts when I link to the shows, you're going to feel a lot more in control, because you're going to know about why you're doing this. It's not going to be an emotional decision. And the beauty about having a service-based business is you actually get to choose how much faster you want to bring money in. So it is pretty cool. But the invitation to you is to let go of the self-judgment. You're not a bad person. You haven't done anything bad if you're just getting your store ready. And that mindset, again, that could block your money flow is going into that judgment and then not taking action. Or maybe you need one more thing that's the difference between kind of being in purgatory of not open, not making money, and not having a business to fully thriving, and you don't do it because, oh, I've just borrowed so much money, I feel guilty borrowing more. That's going to block your money flow. So again, we want to be strategic about it and really think through and release the judgment so that you can use that money as leverage. And the final point is when you use borrowed money emotionally, when you're not strategic, when you think that you're not paying attention to what the return is, when you're not thinking about how it's going to, you are thinking a little bit how it's going to benefit you, but you don't know why you're investing in this. And you just think, well, I've got a credit card, or you are thinking that, okay, I have all these bills coming up next month, and emotionally you're not feeling ready to make a sales call or pick up the phone or talk to somebody, and you think, well, it doesn't matter, I'll just cover it with my credit card. That's really dangerous. That is dangerous, because you're not thinking about making money. Or if you're not being calculated about the money that you're borrowing and what you want to get on a return, and you're not thinking about, will it even create a return for you? You're just in the moment of being emotional, you can get yourself into a lot of trouble. So that's the other extreme, right? Where I see people they pull their credit card out, they go get another credit card, they pay one credit card balance from another credit card balance, and that's pretty dangerous. So the bottom line is you just want to be strategic about it, and what you want to do when it comes to having borrowed money for your business is, like I said, remove the emotional charge. So we're going to go through this again. You want to remove the emotional charge. So get rid of the word debt. I've used it a few times in this broadcast because I know that's the word that goes through people's head. I don't want to create debt. I don't want to create debt. Remove that word. It's a bad word and it makes you feel bad, right? It's a self-judgment word. Remove the word and look at it for what it really is. It's borrowed money. It's something that you are going to leverage to build your business. So just take that negative energy out of it. Look at paying it back as a strategic initiative, not I borrowed $5,000 today, so I'm going to take every single penny I made and pay back that $5,000, because you're going to create a perpetual cycle. Focus on creating income, focus on creating wealth, maintaining your balances, paying what you owe on time, and not a penny more until you are comfortable and you start to build assets and equity in yourself and your business. And then when that's at a level you like, change some of it from savings to making bigger payments, and you're going to see how fast that goes away as long as you're focused on making that money. The next thing is you don't want to have self-judgment and you don't want to avoid it. And finally, you don't want to borrow emotionally. So this was a longer broadcast today, but I know it's an important topic. If you have any questions, just leave them below. I will come back later and leave the links to those episodes where you can download those worksheets that will really help you make a decision. And they're not worksheets about borrowing money. They're worksheets about, like, is this the right thing to do? I mean, because that's the question. That's the question. That's the most important thing. And again, you know, answering that question is 50% gut, 50% strategy. So, I mean, sometimes your gut will override your strategy and you've got to be able to trust your gut. However, going through that exercise is going to give your gut some oomph in knowing what to do or what not to do. So I'm going to sign off for now. Thank you for being with me. Thank you for putting up with me in the initial stages when I had no idea if I had a screen or not. And we will see you guys on Thursday. Have a great day, everyone. Bye.